Good afternoon, everyone. This is Christian with PerfectStockAlert.com, a 100% free service for smart investors and traders. All we ask in return, please refer a friend. Today is Friday. It's January the 20th, 2012. Let me get the right tools. Alright, what we do every single Friday is go over all the charts that we actually monitor for the global markets, so you'll know everything that I know going into next week. So this is a really important video series. If you watch any of our market analysis videos, be sure you watch the Friday one, okay? And these charts are always kept on our free website at PerfectStockAlert.com. It's right there. It's 100% free. You can check it out whenever you want, and I update them whenever I see something important. I'll put a notation on the chart there, so it's available for you guys to check out whenever you like. Right now, what we have going on is a slow motion move higher in the markets. It's actually getting more confident as it goes along. I'll show you that in a minute. All right. We'll start off looking at the Australia's AORD. You'll notice you were in this downtrend going on for a while, and then you started making a series of higher lows than the previous over here, which meant you had a possible reversal happening. So then all of a sudden you get this move up here, takes us higher than this previous high here, pull back, higher series of lows. We told you back here you could be a buyer, expect this to move higher. She's continuing to do that. And you'll notice right here we have this little line drawn right here and this little line drawn right here. This right here is showing that the close of the candlesticks are actually trending up, while right here on the Ultimate Oscillator what you're seeing is a trending down of momentum. That's a bearish divergence. However, I wouldn't worry about that right now. First off, a bearish divergence is a sell situation. You want to sell that. But we told you don't sell it just yet. Wait, because things can happen. Things can change. If you continue to see a press higher here in price activity, what's going to happen is this Ultimate Oscillator will get driven higher, and then you will no longer have that bearish divergence. Here is very easy to see that actually happen. So let's not be bearish. Let the move to the upside continue to happen. We told you a couple days ago that, actually yesterday, that this move here, you had a shooting star formation. It looks like a sell signal, but I told you I would not sell it. In fact, I would just take my stop loss limit that was way down here and advance that guy way up here. If she breaks down, fine, you take your profit and walk away, but she didn't. She continued to move higher. So that's a good sign. You want to see that. Let that continue to advance, and then we can advance our stop along the way. A quick look here at the Dow Jones Industrial Average. You'll notice right off the bat that we have another bearish divergence formation here. But again, let it continue to do what it does. You don't need to start selling right now. It's not making any. It's not breaking down at the moment, so it's not time to start selling. And it could also continue to move higher and press this Ultimate Oscillator higher, and that would eliminate any semblance of a bearish divergence. So don't worry about that right now. One thing you do want to note, though, is you have a high point here and a higher high here, and this gave you an uptrend line, looks like that. And you'll notice the low points here, and this gave you an uptrend line, looked like that. And we thought what we were seeing here was a rising wedge pattern, which is basically ultimately it trends up within this range and then breaks down. That didn't happen here. What instead happened, we broke out of it here, and we've had 2 days going that direction. We've also had 4 consecutive days to the upside, and we have now closed above the upper Bollinger Band line. So if you're asking yourself, hey, would you chase it here? Would you be a buyer? Not this particular chart. I wouldn't. I still see more upside room for the overall markets, but I would not chase anything that was sitting up there. The Ultimate Oscillator up above 70. You're trading above the upper Bollinger Band line. I wouldn't do that. And right here, you don't have a lot of really quality entry opportunities. So no, I wouldn't chase it. But she still can continue to move higher. That's why when we were seeing this thing, we told you do not attempt to short it. Wait until it starts breaking down. That's your timing. That's what you need to have whenever you're trading. You can see things that you think are going to develop, but wait. When price begins to confirm what you believe you're seeing, then move on it. Until then, just wait. Quick look here at the French CAC 40 index. You guys know that we have been we had a sell back here, a sell signal here, and we told you that that move would not likely go very far before you reverse back to the upside to test this previous high. We knew that because over here you had a shooting star formation. Over here you had it again. Those are telling you that there's sell pressure at this level. Over here you don't see that, and in fact you get a higher high from the close perspective. So you know that you're going to test that. So she bounces up here, pierces it, and starts moving around sideways, and then takes off to the upside again. Again, we're seeing the same bearish divergence formation here and here. This one is not actually as likely to be able to reverse that. That means this is really actually probably forming a realistic top, but not yet. Wait for it. Let it keep pushing. Right now, you know it's not over because you're still making, let me clean that up, you're still making higher highs and higher lows. More accurately, higher highs, the most important part. As long as you're still getting higher highs, then your uptrend is not actually over yet. We'll talk more about that in a minute. The German DAX composite, the DAX, you'll know this looks a lot like the French markets we just looked at. Same basic scenario going on here, bearish divergence formation, and this one is still pretty weak. I'm not seeing a lot of potential here for changing the current signal that we're seeing here. We'll keep an eye on it, but I don't want to be shorting it just yet, but definitely keep an eye on it. Would I be buying at this point in time? No, I would not do that. It's also run up substantially way up there. If you're already long, you should be advancing your stop. Right now, I'd have my stop way up here. I want no risk on the table, so that's how I'd be trading that. If she continues to press higher, great. If she stops me out, I'll just sit out and wait and see what happens next. Quick look here at gold. You've had a nice reversal. You had this bullish divergence formation here. You're still trending up at the same time. Price activity was trending down. You got a nice bounce off of that. You could have played that off the hammer candlestick as well. If you've been to our free website at perfectstockalert.com, there's lots of videos there teaching different trading methods that I use. One of them is how to trade the hammer reversal candlestick formation. You guys can check those out on your own free time. But since then, we've actually not had a lot of strength in this move. It's been churning up slowly. A couple up days, couple down days, couple up days, couple down days. Nothing all that impressive, but she is still trending higher. Oh, shut up. Sorry, people call. Anyway, so we are still trending up here. I would advance my stop and keep a tight stop on it. If she wants to continue to rest higher, great, but I don't want to risk anything in this particular market. The only thing I see right now that can actually bring this market to a grinding halt that we're seeing, not just in gold, but around the globe right now, would be some news out of Europe that would be, like Greece defaults or something of that nature. That would automatically put a cap on the rise to the upside. But without that, I still see more upside potential. Now, in this particular case, looking at gold, what you have here is this previous low here, this previous low series here. These guys right here are previous support that broke down right here, and now they're acting as resistance. That's why you're bumping against that line, okay? So keep an eye on that. That's why I would advance my stop up here. If she breaks out, great. But if she doesn't, she just reverse away from that, I don't want to be in it. The Hong Kong Hang Seng Index has actually finally caught up to the rest of everybody else and reversed its downtrend to an uptrend. Not actually been able to make a lot of calls on this chart because the chart's typically messed up for me throughout the intraday time period when I'm trading, so I have to wait till the close and then a little while later before the chart's actually looking right. And I can actually read it again. So I haven't been able to do anything with the Hang Seng Index personally. Personally, if I were you and I was long the Hang Seng from any of these opportunities you've had back here, you had a move up here, pull back, giving you a series of higher lows as well as a hammer candlestick reversal signal here you could have traded off of. We talked about already the videos that we have on our website to show you how to do that. If you've done that, or if you bought the breakout here where you had the resistance line and you actually broke out, if you bought that, I'll tell you what I'd do. I'd take my profits and walk away. And the reason for that is that almost this entire candlestick is outside of the upper Bollinger Band line. When that happens, you're typically getting to that topping point. If you don't do anything else, take your stop loss limit, depending on which method you would be using, would depend where your stop loss limit is at. I would take the sucker and draw it right there off the low, and I would keep advancing into every single day as a low point, and just until I sooner or later got stopped out. And I would expect that to be sooner rather than later with the Hang Seng Index. I think I might have just done that wrong. Click pause when I should have clicked resume or whatever. Let me draw this one out again for you, just make sure that you guys see that. What we saw back here a while back was resistance line here, here, and this was going on for a while. We had a pull back here, come up, test it, fall away from it, come up to it again, play at that, and we told you that at the same time period you had this low point and this low point trending uptrend like this, and this is a bullish pattern that typically break to the upside. That's what happened here. So you had this break to the upside, then a pullback testing that resistance line, and you're finding it acting as support now. That reverses the situation. It starts to move back to the upside again. What I want to know next time you get a pullback here is if we're going to respect this point right here, this low point. If we get another pullback here, let's say we advance and we continue to pull back next week, let's just say we did. then if you did that and continue to make higher series of lows, you have a possible buy opportunity. You can continue to move higher, at least testing the previous high. But if you don't, if you pull back down here and take out this low point, yeah, then you're starting to see a breakdown of the uptrend. Alright, people are starting to decide that the oil index is just going to be sitting up there overbought for a while. Would I be a buyer here on a breakout? No. Would I be a buyer on any little tiny pullback in here that we might see, that we've seen before, like we have a move up here, little pullback, move up here, little pullback, move here, little pullback, move here? No. The reason I wouldn't is because you're starting to get this formation going on right there. That's starting to lose control of your uptrend, and I don't want to be a buyer in this situation. Would I sell it? Well, obviously you're not seeing the top because you're still making higher highs, so I wouldn't sell it either. Like I also said a while back, with oil, you've got that headline risk. They may do something crazy in Iran and shut down the whatever that place is. I forget the name of it all of a sudden. Anyway, I recently saw a headline that said that they basically would never do that. The argument of the analyst was it could never happen. And when you say it can never happen, you've basically just invited it to happen. So yeah, I wouldn't do that. Looking at the UUP, or the Power Shares US Dollar Index Bullish Fund, you've got a real sloppy chart that I wouldn't actually trade. Back here you had something that was actually looking like something you want to go long, higher highs, higher lows. That's the kind of situation you want. You can easily be a buyer here with a stop off of this low point here. That looks good. You look for advances back to the previous high. That's a tradable scenario. Over here, we're starting to get a little bit of a mix-up. We get this move here, a lower series of highs, lower lows, higher series of highs, and we're starting to pull back down again. Now we're getting higher lows. I'm not a big fan of trends that are breaking down and starting to form. What you may be actually seeing, I remember that tops often take time to form, so you may be seeing a top form here. So I definitely would not be a buyer. Again, you'll notice shooting star formation here, 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 here. Yeah, that's the kind of thing you typically see on top formations. So no, I wouldn't be a buyer here. Someone's bound to ask, would I be a seller at this point, since I wouldn't be a buyer? No, the reason for that was right there. The Russell 2000 Small Cap Index has been on a nice move to the upside. However, I don't think it can shake off the bearish divergence here. I think it's too big, and it's going to break down. Even the uptrend is not showing a lot of strength. It's been a really tight traded range. Let me show you what I'm looking at here. You had the same breakout scenario going on that we talked about, and I think it was the what was it? NASDAQ, and then we had this breakout here. But if you look at the overall pattern, you basically got a scenario where this guy here, this little high point there, and there, you draw yourself a little trend line right there. Well, let's see, let me clean that up. This is how we want to draw that. Right through here, and then just take the same thing, draw it in here. You got this little channel, not even that wide. It's actually right in here. Right, this little channel is not giving you a great buy opportunity. I wouldn't be a buyer at this point trying to hope for a move up to here. That's not enough money to be made there, and your risk is way down here because you get your stop way off that. I don't like that at all. Even if you set a stop right off of here, there's better charts out there to trade. There's a lot more volatility in them. This one just doesn't impress me, and like I said, I don't think it can shake off this bearish divergence. Is a big one. It's going to have to make some serious moves to shake that off, and I don't see that happening. The S&P 500 Large Cap Index, same bearish divergence, only this one it could actually shake off. It's not that big, and so that's something to keep in mind. You are still in a strong uptrend, and you want to respect that. Something else you need to note, this Friday you had a close to the upside, very small, but she was willing to close to the upside. That has not happened for the past couple of Fridays. What does that mean? Friday's a sentiment day. It's when you can look at the overall close of the averages, and you will know that investors are becoming more bullish or more willing to buy and hold over the weekend when you see a close up on Friday. That's what we saw today. We have not seen that for the past couple of Fridays. So what's going on now is people are starting to just jump on board with the, okay, fine, the market's going to keep going higher, and I'm going to go long. And so they're jumping on. Where are they jumping on at? Towards the topping formation. That's just what people do. But it is something to take a note of whenever you see that. You can't look at that and say, oh, it's the top because that's happening, but you can look at it and say, okay, we weren't doing that, and all of a sudden people are finally just agreeing with it and saying, okay, I'll just jump online, jump on the markets on the uptrend and make some money. I've just sold my SPY today. I didn't do that because I was looking at the market and saying this is the exact peak. I never try to do that. What I closed it for simply because it was an option position and I had to close it. So that's why I closed that position. I still see more potential to move to the upside. Quick look here at silver, and this one's actually a funny chart for me because I think the day after we brought this to your attention a couple days ago, on either was this day, I think it was this day, we told you could be a buyer of silver with a stop right here, a really tight stop. We were looking at that because of this, well, you can go back and watch the video, but there's basically an inverted head and shoulders pattern formation right there. And that was enough reason, in our opinion, that you could see a continuation move higher. And we told you about how high we'd expect it to go in that video, so you can check that video out if you want more detail. But the funny thing to me was that somebody actually came out and said, no way, or something like that with exclamation points and things of that nature. And never say no way, but never do that. I've done it and I've been burned for it. Now you just got burned for it. So now you know the no way has happened, and it's a nice move to the upside. Those of you guys that have profits on the table, congratulations. Advance your stop from here to lock in a minimum gain and continue to let her move higher if you like. I would if I were you, but I would advance my stop as well. Today we'll have a look at TSX, or Canada's markets. This one has been interesting, and it's another one that's got a big bad bearish divergence formation on it, and I don't think it can shake it off. What we can see, though, is a continuation move higher. It's not necessarily the top. Remember that bearish and bullish divergences don't actually call bottoms. You need to wait until the chart or price activity begins to start confirming what you believe you're seeing. You had a potential opportunity to short here off of this shooting star formation. That would have worked for you for a couple of days, or actually about a day. You had to move to the downside, and then she turned around and bounced back up and started heading higher again. I didn't actually think this is the very tip-top anyway, but up she goes, and we see another one here, and she's not even respecting that one. She's going to continue to move higher. However, like I've already said, I don't think you can shake this off. You'd have to make some serious move to get this ultimate oscillator to pull up here and break out higher than this one. If you fail to do that, and you start to peak, then that bearish divergence formation right there will be jumped on by everybody in the market once the trend shifts. So that's important to know. That's why I keep saying, keep an eye on this one. When it's ready to top, you'll know. I'll let you know when I see that, and it will be a great short opportunity. Right now, it's not time, but keep an eye on it. The VIX, or the Volatility Index, is the basically inverse of the S&P. If you look at the S&P 500 and then you want confirmation of that, look at the VIX. You'll typically get that from looking at the VIX, and sometimes you won't. And when those situations arise, when you're not getting told the same thing, either the VIX or the S&P is lying to you, and that's something important to note. In this particular case, we're just getting confirmation. You'll notice, I have to update this chart again, but you'll notice here you've got these series of low closes here. They're trending down along with this one here, and now another one here. Also notice the big down move here in the VIX, and not as much move in the S&P. So the S&P is actually probably the one that's lying here. The VIX is sold off substantially. That's fine, but the S&P should have been up higher, and it wasn't. It'll probably pick up speed early Monday. You may get a gap up or something of that nature. We'll have to keep an eye on it. But in any event, this is confirming the bearish divergence on the S&P because it's showing you a bullish divergence here, basically showing more situation where price activity, the closes are going lower, yet the momentum here on the ultimate oscillator being indicated is not. It's actually trending up. You also have a situation we'll get into later, but it's basically saying this big move we're seeing in the market for the past couple of months is probably fake, and we'll get to that later. But it's important to note, don't get in love with the trend, uptrend or downtrend. Just note that right now she's trending up in the overall markets, down in the VIX, and you can use that, but keep a stop on it. If you've not been to our free website at perfectstockalert.com, it's right there. It's 100% free, and all we ask in return is refer a friend. There's a lot of good videos there that teach you different trading methods I recommend you check out. I think there's 10 different trading methods I've got up there for you right now. God bless, take care, enjoy your weekend, and I'll see you guys on Monday, huh? All right. Please take a moment to review our disclaimer. The information provided herein is our opinion only. Under no circumstances do any statements here represent a recommendation to buy or sell securities or make any kind of an investment. You are responsible for your own due diligence. To summarize, we do not provide investment advice, nor do we make any claims or promises that any information here will lead to a profit, loss, or any other result. These videos are for educational purposes only.